Back to the Beat the Odds podcast. And today we're joined by Josh Spurrell, who is in Dubai. Hey, Josh, how's it going?
Pretty good, Trevor. I understand some things happened while I was away here. Government got overthrown. Our biggest trading partners got a new customer, a new supplier. So
Yeah, and the immediate reaction from Canadians is like, "Oh no, they're going to get all their oil from Venezuela." What's going to happen to the oil sector in Canada? And there's a lot of knee-jerk reactions. But today, I think we're going to dispel some of the rumors and the myths that go along with that, and kind of calm everybody down because as we know, and you're going to describe today, that it's going to take a while to fix the broken system in Venezuela. So I'll let you go ahead with that.
yeah, so let's dig into some math about it because I think a lot of people are reacting on emotions and they're not really looking at the math of it. So let's start from Canada's GDP. So $3.3 trillion is Canada's GDP approximately. We export approximately $760 billion. That's our total Canadian exports. Hydrocarbon exports are our biggest. I know there's a bunch of people who think that the entire world runs on hydroelectric dams or solar power or something like that, but $230 billion is our total hydrocarbon exports, and that would be oil, natural gas, and refined hydrocarbon products. And 95% of that is sold to the US. So $3.3 trillion is total GDP, 760 billion is total exports, and 230 billion is hydrocarbon exports, 95% of which is sold to the US. For perspective, the number two would be the Canadian auto industry is 80 billion. So hydrocarbon, 230 billion, exports of auto parts and cars is 80 billion. So it's significantly less. So those are the numbers in mind. So when people are having that kind of knee-jerk reaction and think that Canada, US will get all of its oil from Venezuela, and Donald Trump will unilaterally declare that. Okay, now I guess if that did happen, if $230 billion worth of exports disappeared overnight, that is a major event. Like that is a Great Depression type decrease in GDP type, that's the type of thing that's, 6, 7, 8% or something. And that would be, akin to the annual percentage decreases in the Great Depression. But let's walk through what the probability of that is. Okay, so Venezuela does have proven oil reserves of approximately 304 billion barrels of oil. Okay, Canada, that's number one. Number one. Okay, Canada has proven oil reserves of 170 billion, which is, most sources number five. So 304 billion to 170 billion. Now, Venezuela's problems with their government are one thing, and the difficulty of mining their oil is a different thing. Okay. Neither Canada nor Venezuela has the same light, sweet crude that, a Saudi Arabia would have, for example. Okay. Well, let's go through the production because production, reserves are one thing, production is another. Okay. Venezuela's oil production, they produce about 1.1 million barrels of oil per day. Canada, that's number 18 in the world. So they're number one in proven oil reserves, but number 18 in production. Canada, on the other hand, produces 5.5 million barrels of oil per day, which is number five in the world. Okay. Now, let's look at, excuse me, historically. Um, Venezuela peaked out historically at 3.5 million barrels of oil per day. Okay. Um, now, uh, you know, Canada, on the other hand, like we're producing 5.5 million. The estimates that Venezuela could increase production because maybe the thought process is that Venezuela has not just the reserves, reserves are one thing, production's another thing, production capacity is a different thing altogether. The estimates are that Venezuela could ramp up production with kind of modest capital expenditures in the next 1 to 3 years to approximately 1.5 million barrels of oil per day. That's what's possible in the next 1 to 3 years with modest increase in capital expenditures, which one would think that is likely to occur. Okay, but even if they do increase that, and they hit that target from 1.1 million barrels of oil today to 1.5 million barrels of oil per day, Canada still produces 5.5 million barrels of oil per day. So there's no world where they would be able to produce and replace that 5.5 million barrels of oil per day within basically Trump's tenure. And here's the point where we talk about the Trump derangement syndrome a lot. And Trump doesn't make these decisions. Okay, Trump might have made the call to go get Maduro, but he doesn't tell Chevron who to buy their oil from. He doesn't tell the oil refiners who to buy their oil from. They're going to buy their oil. The cheapest place for them to buy their oil is using the existing infrastructure. Okay. So what we're talking about primarily is where will development for new production come from? And so in the next 1 to 3 years, we would expect that additional investment would likely go to Venezuela because Venezuela has a couple challenges. Only one of which was the political regime. Venezuela's oil is particularly difficult to mine. Canada's isn't easy to mine either. It's tar sands, it's oil sands. It's not Saudi Arabia crude oil that gets produced for less than $10 a barrel, which is kind of wild when you think about the prices. And it's like that. That's why Saudi Arabia is so rich with oil money because Saudi Aramco is producing oil for less than $10 a barrel and selling it for 50, 60, 70, 80, $100 a barrel, depending on the time and place of when this gets sold. But Venezuela, kind of the crude understanding of it is that more of their proven oil reserves are offshore. They're not actually just heavy oil reserves. And even their heavy oil reserves, their oil sands, if you will, and they have different depths and viscosities. So Canada's, when you're mining oil, if it's all one even depth, that's a little bit more cost effective to mine. But when it's varying depths and varying viscosities, it's more expensive to mine. And that's kind of the nature of Venezuelan oil. But on the other hand, Venezuelan workers are cheaper than Canadian workers. So if I'm an oil company and I just look at the political regime, which one is now more friendly? If the U.S. is trying to recoup their investment, so to speak, from this mission, the oil company executives might be thinking that it's going to be the political climate is going to be favorable to oil development, where I think we've known about the problems in Canada, where we see that the oil, producing oil in Canada is very uncertain. Can we get the permits? Can we get the pipelines to get it out? So I think you're going to see new capital expenditures, flow increasingly to Venezuela. That's very, very likely. But Venezuela's ability to replace the 5.5 million barrels of oil per day, when all estimates suggest that the kind of the best case scenario is that they could produce 1.5 million barrels per day in the next 1 to 3 years.
Yeah, and that's the big point I think that people need to take away from this is we are not going to be replaced overnight. Like there's no way. It's going to take multiple years. It's going to take billions of dollars worth of investment. And then there has to be the ability for these oil companies who are going to repair, replace, and improve the infrastructure in Venezuela to get their investment back. Like there's a lot of things moving here, but I don't want to kind of glaze over and think, oh, everything's fine, because for years we have had a major productivity problem in Canada, and we should be having pipelines that are going to both the West Coast and to the East Coast, so that it opens up more markets to Canadian oil and gas. What are your thoughts on that? And where do we go from here?
Yeah, so that's the important part to understand is like, people, trying to let their personal thoughts about Trump kind of control their emotions a little bit. And Trump doesn't decide who oil companies are going to buy their heavy oil from. They're going to buy from whatever makes their shareholders the most money. And their shareholders are going to make the most money by buying by existing proven infrastructure. But you're right. This isn't just a nothing burger. It's the new infrastructure that's going to get invested. It's even less likely now that that's going to get deployed in Canada. And so, in terms of increasing our productivity, I mean, directing our labor and capital to the highest paying activities, which has been resource extraction. Since this political regime change, we probably shouldn't expect there's going to be a whole bunch of capital expenditures, and they've been largely throttled back or frozen in some instances since 2015. And that was a combination of kind of the political environment, and plus just the oil prices around the world tanking, where oil companies decide, I don't want to invest in any new infrastructure, especially in Canada, because the political regime is not entirely favorable. We can invest a bunch of money and maybe never get anything out of the ground, and we're not certain where the prices are going to be. So it's one of the big reasons why we have that, GDP per capita issue. Is like, the other one being that we just don't invest in any capital expenditures, especially in the small businesses that create 53% of the jobs. They, kind of have no access to capital. That's a whole other issue. But yeah, it's a very concerning long-term trend. We already were very, very concerned with the lack of capital expenditures because of the political environment, but it actually just got way, way tougher because now one of the other, competitors, and you have to view these countries as competitors. They're all trying to sell their oil and their resources on international markets. One of them with a whole bunch of proven reserves now would look to be more friendly than Canada in terms of the political environment. They might not have the same geological advantages that Canadian oil has, because again, a lot of Venezuelan oil is a lot of it's offshore and a lot of it's at inconsistent depths, what makes it a little more difficult to mine. But like I said, they have cheaper labor than than we do, right? Because it's not all just political regime, right? Because Libya produces more oil than Venezuela. People forget about that. It's not like the Libyan government is this amazing free market machine or anything like that. But they're producing more oil than Venezuela at number 18. But so long term, if we weren't concerned already about lack of capital improvements to increase productivity, we should be now. Short term, like I said, there's just no way practically to replace that 5.5 million barrels of oil per day using Venezuela, because it's going to take time and significant capital investment, and you have to encourage companies to invest that capital, and they just won't invest that capital until they've exhausted the productivity from their current capital investments. It's like, why do I need to invest in new capacity when my current capacity is meeting the market demands? It's like the concern is, where's the new investment coming? And we're already very, very concerned that it just wasn't happening in Canada for a very long time. But now, in terms of the future outlook, it looks like in that respects, the future aspect of additional capital investment, it kind of looks like a death blow.
Yeah, and just because of the political stuff that's been happening in Canada for the past 10 years that we've had liberals in charge here since Trudeau and now Carney, who was his puppet master. There has been we've scared away billions, hundreds of billions of dollars worth of investment in projects in Canada, mostly related to oil and gas, because that is like one of the biggest triggers that we've got in Canada. Other things, that has caused problems is interprovincial trade. So in Canada, we've got problems with BC not wanting a pipeline, and they want to ensure that, the Indigenous tribes are consulted and, get their grift on this whole time. So companies are very hesitant to invest in Canada, because why would you? Why would you want to invest billions of dollars, go through all these environmental, plans and studies and engineering and all of this stuff just to be rejected by the Canadian government? Like, it takes a decade or more to get permits to even start a project here. And that's billions of dollars for a company. So, if we want to see some change in Canada, like, we're not going to vote our way out of it, but I don't know what the answer is, because the answer is plain as the nose on your face, that we need more capital expenditures and investment in Canada, in our resource development, but also in small business development. Like, small businesses need capital to survive. They need capital to grow. They need to invest in machinery, in equipment, in buildings, so that they can, be the entrepreneurs that they are and invent cool stuff that we can sell to the rest of the world, right? So with that in mind, like, let's pack this up and put it into a package that our viewers can, comprehend. It's like, where do Canadians go from here? Because it looks like, from all aspects on the outside, from the political climate at any rate, things aren't looking good currently. But there's got to be hope for the future, at least the near future, and possibly moving forward into 5 years out, 10 years out, to build wealth and potentially find other options. So maybe talk about that a bit.
Yeah, so I mean, the rational expectation is that we're not going to get that capital investment that's going to have that broad-based productivity increase that benefits, the 80% of the population. Like, that's not likely. It wasn't likely before the regime change in Venezuela, and now with a likely a more uh, accommodating regime incoming in Venezuela, it's almost certain at this point. So that sort of resource and oil and gas, development to increase our productivity, it's just not on the horizon. Okay. So I mean, and that's probably not something we're gonna vote our way out of, and you're not gonna take, Crown Royal off the shelves and change that anytime soon. Like that's just not gonna happen, because that's not Trump making that decision. It's like I said, it's just oil companies making a decision on what's going to maximize the return for their shareholder. And they didn't want to invest in Canada for the last 10, 11 years. They're almost certainly not going to want to do it now. And so where does that leave us? Well, we do know that the current infrastructure is not going to get wasted. The current infrastructure is the most cost-effective way, and you can't replace that 5.5 billion barrels of oil per day by simply capturing a liter. It doesn't. That sort of, you can't just turn on the tap, so to speak. The taps that used to exist, the production capacity that used to exist, it's long since deteriorated. It's gone. There is a little bit of unused production capacity that is available, but it's nowhere near enough to replicate Canada. So what does that mean? It's like, our oil and gas current industry is not going away. It's just not likely to grow anytime soon. We're not going to grow our way out of it. So what's going to happen is governments are going to try to spend their way out of it. They're going to print more fake money, and that fake money, through the magic of inflation, is going to seem like it's coming to the masses, but really it's going to end up in the hands of all the asset holders. So when you print money and you distribute it, to people's like they feel good when they get it, but ultimately they spend it on the assets, at the companies owned by the people who already own all the assets, and a disproportionate amount of that money ends up flowing into assets, and so it's going to result in asset price inflation even more so. Whereas investments that would output a lot of high paying jobs. There's no such thing as trickle down economics. It's not like a bunch of poor people get rich off of serving a bunch of rich people. That's not how it works. What increases, productivity and quality of life is when you convince rich people to invest money. And when you convince them to invest money, that creates that high paying job. So it's not that trickle down over time. It's that investment all at once that brings on, thousands of high paying jobs. It's like that's what actually increases productivity and has broad based increases across the economy. That's not what's going to happen. So governments are going to be even more incentivized to print more fake money, run that deficit from 80 billion to 90 billion to 100 billion to 200 billion. And where ultimately does that capital end up? It ends in asset price appreciation. And so it's going to benefit the people who actually have productive private companies. It's going to end up in real estate, despite the current challenges in Ontario. It's going to end up in high quality stocks that pay dividends. It's going to end up in gold, and it's going to end up in Bitcoin. It's like that. That's where that capital is going to end up. And so once you know that the government is going to try to spend their way out of it, and they're going to fail trying to spend their way out of it, and all they're going to do is increase asset prices. Now you got to figure out how do I get my hands on that capital? How do I figure out how to borrow that capital efficiently to invest in these assets prudently, that I can be one of the few that take part in the upside?
Yeah, I agree with the assessment that you made there. Like, really, the time is now. If you have been sitting on the fence and you haven't been working on acquiring some assets, and we're talking about, if you're in Canada, we're talking about high quality dividend paying Canadian stocks, basically the government protected monopolies like the banks and oil companies and like energy companies and things like that. That's where we're talking, folks. For real solid advice, and you want some insider information, you have to come to our Beat the Odds at Business and Wealth bootcamp. The next one's happening in May. You can check that out at spurrell.ca, SPURRELL.ca, and you can get your tickets there if you want to get that. But other than that, like, watch our podcast. Like, learn what you need to know in order to get started, right? Get some good advice. If you're a high net worth individual and you want to know how to get your wealth to the next generation, if you want to protect your wealth, protect your assets legally and in the correct way so that you can get most of it out tax-free to the future generations, you got to consult professionals who know what they're doing and can help guide you on that path. And it just so happens we have those professionals here in this building. I'm not trying to sell you on it, but for all intents and purposes, like, how are you going to protect your wealth from the government who's always trying to find new ways to tax it and extract it from you? They will be coming after your homes at some point. They're going to come after rental properties. They're going to come after all of these things that you think are safe and secure and sure bets. But you need to have a plan. And in order to have that plan, you got to talk to an expert. So, Josh, what would you have to say to somebody who is a high net worth individual and they're looking to, protect or shield their wealth from the government and pass it on to the next generation?
Yeah, the important thing is not to panic. You mentioned like Canadian banks, Canadian energy companies. It's like they're not going to have this major blow because it's like, we're not going to stop exporting oil tomorrow to the US. It's just, we're probably not going to grow that we have really no discernible plan to grow that 5.5 million barrels of oil per day. Like that's it. Like there's really no discernible plan. It's like that's going to keep happening. The loans that have been made on that infrastructure are going to be good. The energy companies are actually going to be highly profitable because they're just not going to have any additional capital expenditure. Like they're going to be prudent with their capital expenditure. They're not just going to invest capital on projects that aren't going to pay off. They're just going to extract high cash flow from the infrastructure that they already do have built. So you don't have to panic, because the panic is I take my money out of the system and all of a sudden I'm going to be the victim of inflation. But it's like, how do I move past that? So if I'm starting out, where do I put my capital? And if I actually already have capital, now I have to know that governments are going to become increasingly desperate because they actually have no discernible plan here. Their discernible plan is basically to print more fake money to distribute it, and it's going to cause asset price inflation. And you have to know how to protect yourself. And a lot of people don't protect themselves because they're simply in all one asset class. It's like a common thing is they're all in real estate in one municipality. They have a real estate portfolio worth a few $1,000,000, but it's all in one city, and they got the federal government, the provincial government, the municipal government. They all have their hand out, and they can take it from you from taxation, or they can take it from you from regulation. Where being, who I can rent it to, and how much I can raise those rents, and can I kick people out if they're not paying their rent? And so a lot of people are highly, uh, you know, um, highly amount of risk in one particular area, and they have no discernible plan to get that money to the next generation, and then they have no discernible plan to avoid basically kind of unpredictable government regulations, because and taxation regimes. Like they're going to become increasingly desperate, as you've seen like the underused housing, where you've seen budgets getting released in November about what the new tax rates are going to be in January, which is almost like retroactive tax planning. We're not getting them in March or April anymore, about what the rules are going to be about next year. We're getting them in November or December, what the rules are going to be tomorrow, which is effectively like there's no planning. But if they increase the capital gains rate in December, it's like no one's going to list a property in December and close that property. It's like you're closing windows, and what you're seeing is just governments are going to become increasingly desperate, and you have to expect the unexpected, and that's why you have to be across different asset classes, and eventually it's like you have to be more geared towards liquidity. And eventually, if you really want financial freedom, is you can't have all your assets in one country that's going broke. And the both Canada and the U.S. are the same in that regards, right? This change is not going to change the fact that the U.S. is $37 trillion in debt either. They have their own trouble, right? They're going to spend money hand over fist in unproven AI infrastructure, not knowing which ones are going to be prudent and have a return to capital or not, right? And so both of those countries, forget about today's regime and today's government or Trump or Carney. It's like look 4 years out, 8 years out, 12 years out. It's like you have to expect the unexpected. It's like, how do you protect yourself? How do you have different strategies and different kind of chess pieces on the table that you can react to, as opposed to a one trick pony where, if the regime, if the rules change out of your favor, like you're going to have a significant impairment in your net worth.
Yeah, no, that's amazing. I think that people need to get on board and do something and get started, and not to panic. I love that, saying not to panic. It's not going to happen now. And remember, Trump is only going to be in office for another 3 years, right? 3 more years, it's over. It's done. We got midterms coming up as well in the United States, which could have terrible outcomes for the rest of his tenure. We don't know what's going to happen in this next 4 years, but we're guaranteed that you need to be prepared beyond those 4 years. And I love what you said there about, having your money in more than one place, in jurisdictions that aren't failing and going broke. The United States is in big trouble. They're trying to, I think there's some plans to try and mitigate some of it, investing in Bitcoin and AI and different infrastructure. But there's no magic bullet, and there's no way that they're, magic way that they're going to save the financial system. The financial system.
They have no plan either, Trevor. They got $2 trillion deficit. They got no plan either. There's no discernible plan on either side of the border
Yeah.
to fix that situation, right? Money printing is the plan. Like that's the plan, right? And once you know that, it's like now rather than get upset and taking liquor bottles off the shelves and thinking that's going to fix something. It's like that's not going to fix anything. Waiting for the next election, it's like that's not going to fix something. I think in our lifetime we're going to look back and look at guys like regardless of how you feel, you're going to look at the Trumps of the world and the Bidens of the world and the Trudeaus of the world and the Carneys of the world and the Harpers of the world, and you're going to wish you could go back to them. Like as they become increasingly broke, I think you're going to have to see way more extreme regimes come to the table on both sides of the political pendulum, and I don't think it's really going to be good for stability. So, I think expecting stability is the mistake, right? You should expect instability, and how do you position yourself, your portfolio, your net worth, your asset allocation, what options you have available for you and your family. It's like that's going to be the key.
Yeah, and that's just it. It's having a plan, not panicking. But I like what Patrick David says. He says only the paranoid survive. So
Yeah.
be ready, right? Be ready for anything. We've got a question in the chat. I'll just go and read that for you right now. So I don't know that name, Naya, then a bunch of numbers. Is the stock market overall expected to go down overall, including banks? Because in 2020, all stocks and shares dropped. Are you saying that banks and energy, because they are likely to recover?
I mean, yeah, I think there's a differentiation between where's the stock market going in the short term, where's it going in the medium term, where's it going in the long term. Anyone who tells you where it's going in the short term, like I don't think they have a high degree of conviction in that, because a lot of people have opinions on that. But I'll ask them, it's like, okay, well, if you think the stock market is going down, have you sold all your assets and are you shorting it right now? It's like they don't, right? And so you have to understand that there's large market players, and ultimately the biggest single variable in the whole thing is the money supply. If the money supply goes up, the stock market goes up. It's like the Argentinian stock market went up tremendously in hyperinflation, and that's not a sign of a well-functioning economy. That's just a fact of it's just a math equation. It's like, where does that excess capital go? A disproportionate amount of the excess capital goes into desirable assets, and it's going to go into the stock market. So eventually the conventional thinking is that if governments do not balance their budget over the long term, short term being 1 year or less, medium term being 1 to 10 years, and long term being 10 years or more, governments are going to print more money, and that's going to inflate the value of both the stock market and the real estate market. So long term, it's going up. It's going up in nominal terms. The key is it going up in real terms when you're comparing it to something like gold. So I wouldn't take any position. I never take any position of where is it going. I'm not selling all my assets. I'm not selling all my real estate and playing the stock market 1 year and then selling all my stocks and playing the real estate market the other year. And I hear people like pontificating about that and saying it, but their actions don't reflect their opinion. It's like the key is you need to be diversified into different asset classes, because you should expect volatility in all of them on any given year. And so the key is positioning yourself into different asset classes, expecting unpredictable volatility in all of them in any given year.
Yeah, that's prudent and wise, not being a maxi on any one asset class. Like you pointed out all the problems, the potential problems that can happen with real estate. Like that's a real thing. Government regulation, legislation, and as well as the economy, like them telling you what you can rent, how much you can rent for, rent control, putting handcuffs on you basically if you own property. Then there was the deal just a couple of years ago when Trudeau put an all-out war on temporary rentals, like people with Airbnbs. Like holy cow,
Yeah,
like that
yeah.
that is a big problem, right? So being a max in any one asset class is a mistake. So being, diversified and spread it out amongst others is wise. Now, you did mention, having your assets in other jurisdictions that aren't going broke. What are some of your thoughts and your suggestions on that side of things?
Yeah, I mean, there's some people worry too much about that early, and I would view it's like, what's the path to financial freedom? Like the path to financial freedom is I think you got to get your net worth to 1.3 million bucks. That's where the top 20% of Canadians are. They're at a net worth of 1.3 million dollars. Then you got to figure out how to get a liquid net worth of 1.3 million dollars. Once you figure that out, now your next step becomes how do I get some assets in a jurisdiction that is not going broke? And there's very few of them across the world. And you'll start to find out that there's probably only 11 countries on planet Earth that have three or more surpluses in the last decade. And the price to admission from some of them are so outrageously high that they're not designed for regular McMillionaires. So the price to admission might be designed for billionaires. If you're trying to get some money in a Singapore or something like that, for example. But there are some solutions for the regular, let's call them the regular McMillionaires, of how you play that, because are you really financially free if all of your net worth is in illiquid assets? I think real estate is the number one target that we should expect in the next 10 to 20 years. And that doesn't mean you should have a 0% allocation to real estate. It just means you should not have a 100% allocation to real estate, because it's the highest congregation of wealth in Canada. It's the easiest for governments to tax. They know exactly where it is. They know that you're kind of stuck in the positions. They're much more worried about, taxes on equity markets, because they know that the richest people can sell their stocks in Canada on one day and buy stocks in another country on the same day. So that's the more difficult one for governments to catch up on. Whereas real estate, it's like it's the biggest, slowest, lowest hanging fruit for them to come after. So you should expect that they're coming after it. And so you should understand as like, how do I get a sizable net worth enough? Because if you've got a net worth of $100,000, the problem is the net worth. The problem isn't your congregation. The amount of the lack of diversification that you have in having all your assets in Canada. It's like, but also if you have $10 million and it's all in illiquid assets, that's a problem too. And even if you have $10 million that's in liquid assets, but you have no escape hatch to another country, that's a problem as well. And just having no exposure to another country, because once you see the draconian things that come in a November budget that are going to be effective in January, you have no way that you can even make moves. You have no accounts in foreign jurisdictions. You have no assets in foreign jurisdictions. You can't even make the moves that would be obvious at that time. And so when you start to go through that, picture of financial freedom, I think I don't know if you're really actually financially free if all your assets are in a single country and that single country is going broke.
Well said. And a thought just came to my mind. Like there is no freedom without financial freedom. Like there's something to be said about being able or having the ability to go where you're treated best. Go where you're in a good jurisdiction where you can thrive and grow. There brings to my mind a book that everyone I think should read, Atlas Shrugged. Atlas Shrugged by Ayn Rand. Such a great book. It kind of highlights what happens when the government and regulation and the grifters, they punish, they legislate, and they rob the producers, the creators, the entrepreneurs, the inventors, all those people who make really cool stuff. When they punish them, they opt out, they leave, and they leave you to your own devices. You wanna live that way. You want to live under a socialist regime. You want everything for free and not work for anything. We're gonna leave so you guys can go ahead and enjoy that. And we'll see who turns out better, right? And the other funny thing. We always talk about real money. In that book, the real money that they used in the new world with all the producers and the real guys, it was gold. They would only transact in gold. And I just got to say, we got to get back to sound money, because this money that we're using, this fake fiat stuff, it's not real, and it's I mean, there's an opportunity now to, use those fake dollars in order to buy good assets and extract it out. But at the same time, guys, you got to be prepared. And I think, there's some lessons to be learned from reading that, and for you to start working on your plan. If you're not a high net worth individual and you're just getting started, there is still hope for you. You can still do this. You just got to get started now. Don't wait even $100 a month. If you get started investing, open a Wealth Simple account and start, investing using your TFSA or FHSA or whatever you're doing, whatever your goals are now. And, just doing some research and getting started small. That's where you got to get going and build that muscle of investing, build that muscle of discipline so that, when it comes time, you might have some better options because those asset prices are going to go up. Because they're going to continue printing money, and it's just going to inflate all those assets because it's going to flow from the people who are spenders into the people who are investors, and that's just reality.
Yeah, I mean that's it, and so that's what we try to teach people in the boot camp. Is like, if you don't have a net worth, if you're starting from zero, how do you actually get to 1.3 million? Because it might seem like it's like that's too far fetched. You can't do that on ordinary income. It's like you can do it on ordinary income. You just can't do it if you do what the other 99% are doing. You, you can't do it if you listen to Sally down at the RBC, telling you to put it into a 60-40 split. It's like the math just doesn't work out when you look at someone working the median income. It's like if they hit all those targets and don't make any mistakes, they still would never hit that. They would never hit that objective. But you can do it. You just have to learn how to, because right now we still can borrow the fake fiat currency to buy highly desirable assets, and we can do it at rates that are rates and ratios that really don't make a lot of sense when you start to think about the value of the fake paper currency. But we still can't do it. It's just most people don't know how to do it. And I think you'll look back in 10 or 20 years and realize it's a whole lot tougher to borrow fake fiat dollars and buy highly desirable assets. Not to be saying that you won't be able to do it. I just think it'll be tougher 10 to 20 years from now. And so the person who starts today is a great advantage. And the people who've actually accumulated some wealth, it's like just realize that you're on an unstable base, and the way to protect wealth won't be the same way as our parents protected wealth, because we have governments who ran up massive debts and they're going to make unpredictable decisions, and you have to have different chess pieces on the board, so you can't get all taken out all in one swoop.
Yeah, I've got another comment from Naya on the chat here. It said, how in God's name does an immigrant with a degree in accounting and some work experience find financial freedom? No inheritance and lower than 100,000 in savings. Genuinely asking. My first bit of advice would be take $200 and invest it in your education. Come to the boot camp, and there, Josh, we spend 8 hours teaching people all of these investment strategies, ranging everywhere from real estate, stocks, Bitcoin, all the things that are necessary to help build wealth, and starting from zero or starting from where you're at. Josh, what advice would you have?
Yeah, she said something like 100. She or he said something about like $100,000, less than 100,000. Maybe it's 90, maybe it's 80. Like people like dramatically underestimate how hard it is to get to $100,000 in liquid net assets. They really underestimate that. They also overestimate how difficult it is to turn 100,000 into a million. It's like once you actually just know how to play the game, it's actually easier to turn $100,000 into a million than it is to get that first $100,000 in liquid net assets. People just don't know what to do with it, right? Because the struggle is real. The budgeting choices are real. We go over some of the really hardcore budgeting choices at the boot camp, the ones that really make the difference, and they're really quite painful when you look at the ones that'll actually do it. But once you get that $100,000 in investable assets, how to turn it into a million or 1.3 million is actually easier when you think about the sacrifice that went in to get to that first 100,000, and how to get to that, how to turn $1 million into $2 million is even easier again, right? So it sounds like there is some liquid savings there. So there are some opportunities to do it. It's just that when you start to look at this, you're going to take the 60-40 split down at the bank, and they're going to put 40% of your assets into bonds, which are basically permission for the government to continue to give you a 4% rate of return on the money and print 8% new money every year and just devalue your investment through inflation. It's like you're just not going to get there with the median level of income. So it sounds like there's actually some really good saving and budgeting habits that are coming from that person that's making that comment. They just don't know how powerful that amount of liquid capital is to have. I tell people it's like, starting from zero, it's like every $1,000 in liquid assets should be a celebration. 1,000, 2,000, 3,000 until you get to 10. And then from there, every 10,000, from 10,000 to 20,000 to 30,000, that's the celebration. And then from there, it's every 100,000, 100,000, 200,000, 300. That's a celebration. And they're all very attainable, until you get to 1 million. And then we start talking about sticks, 1 stick, 2 stick, 3 sticks. But people don't realize the power of compounding and the power of compounding into high performing investments, because they think that it's very, very risky, that the way to de-risk is to invest in low performing investments. Okay. But essentially you just get eaten alive by inflation. What the goal isn't to invest in low performing investments. It's like investing in low performing investments is not low risk. It's basically 100% risk that you're going to get eaten alive by inflation. If real inflation is 8, 9, 10, 11%, when you look at the value of ounces of gold and you're investing at 4%, you're just going to get hammered in real terms. But once you start to understand that you can de-risk by having assets that are not correlated, and there's multiple assets and multiple ways to get a good rate of return, now you start to realize the power of actually multiplying the hard work that person's looks like they've already done.
Yeah, that's awesome. Great advice. So do you have anything else for us on this podcast?
No, I mean, don't panic. This was a really big deal, this regime change. Like, there's some things that aren't a big deal, and we make them a big deal. This, I think, has the potential to be a really big deal if the U.S. can, if global capital can flow into Venezuela to extract their resources. That's a really big deal for Canada. But it's not the big deal tomorrow, if that makes sense. It's like it's really nothing is going to happen next year other than emotions changing, because Venezuela doesn't have the capacity, nor could they ramp up capacity in the next 1 to 3 years to replace Canadian oil. But the thoughts of us attracting investment got even harder than they were. So it's not a big deal. It's not a reason to hit the panic button. But it is a reason. It's one more reason to understand. It's like you're not voting your way out of this. There's no discernible plan to fix this. You have to come up with a plan as a household to fix this.
Yeah, agreed. I think if anything, people should really think about getting started right now, not delaying, not humming and hawing about it, but really making that decision. Take action. Take action on doing something today that's going to change your life for the future. Have a sense of urgency about it. Learn as much as you can and get rolling on that train today, because no one's coming to save you. The government is not going to save you. They're not coming to help you. They don't have your best interest at heart, obviously. If you haven't realized that in the past 10, 20, 30 years, then there's no hope for you. But realistically, things aren't looking grand, but for you, you can make a difference for yourself, for your family, and for your future. So don't delay. Get stuff started today. That's all we got for the podcast today, folks. Thank you so much for joining us, and we'll see you next week.